Hello everyone. With the commencement of the new financial year, we are all looking for different strategies of effective tax planning to save on our taxes through different ways and means. One of the very popular ways of tax planning is through creation of a Hindu undivided family. I am CA Rajit Kothari and today I will be discussing on this topic. By the end of this video, you will be able to devise effective tax planning strategies through creation of a HUF which will significantly help you to reduce on your taxes in a convenient and legitimate manner. I'll be talking about three most important aspects of tax planning through HUF. Number one, what is a HUF and how is it created? Number two, what are the advantages of creation of HUF? And number three, how is practically tax planning done through creating a HUF? What is a HUF and how is it created? A HUF is a separate creation of Hindu law which consists of a married male, his wife, their daughter, whether married or unmarried, their son. As per several judicial rulings, a HUF is created on the very occasion of a male's marriage. This male is referred to as the Karta of the HUF. As far as banking and income tax is concerned, a HUF is a separate recognizable person. This implies that the HUF can own and operate a bank account of its own and can also have a unique PAN, which is a permanent account number recognized by the income tax department. What is the advantage of creating a HUF? Since a HUF is recognized as a distinct person under income tax law, there are several advantages of creating a separate HUF. Number one, basic exemption limit, which is available up to rupees 2.5 lakhs of rupees of income, can be availed in case of a HUF, and lower slab rates, that is lower rates of tax on lower levels of incomes, which is at the rate of 5%, 10%, so on and so forth, can be availed if the income is restricted up to a certain limit. Number two, certain exemptions such as the long-term capital gains exemption, which is available up to 1 lakh of rupees, can be availed for the HUF. Number three, several deductions which are available under section 80C or 80D or some other section on making certain outflows in form of investments or certain expenses can be availed for a HUF. How is practically tax planning done through a HUF? Let me explain you step by step in a detailed manner. Step number one, fund creation. In the first place, it is necessary to create a fund which can be invested at an avenue through which a steady flow of income can be generated for the HUF. Step number two, fund infusion. This fund can be infused by either the Karta of the HUF or any other member of the HUF or from any other third party to the HUF. As per several case laws, if these funds are introduced by the own capital of the Karta or any other member or any other third party and is not from a borrowed source on which interest is being paid, then the subsequent tax implication arising from the investment incomes of the HUF will only be in the hands of the HUF and not in the hands of the person from whom this interest-free loan is availed by the HUF. Step number three, income generation. Now this fund can be invested in a secured fixed income investment option like a fixed deposit or in any other investment option for that matter, in which the income is taxable at the slab rates of income and not the flat rates of income. This is because the HUF can avail the advantage of the basic exemption limit or lower rates of tax in the slab rates of income if the income is restricted up to a certain limit. Had this income been in the hands of the Karta or any other members of the HUF, it could have been taxable at much higher rates, which could be 30% and beyond if the total income of that person is crossing that threshold. Step number 4, utilization of funds. Now we come to the last step, which is usage of the funds. These funds can be used to incur any kind of household expenses. Further, the loan which was availed through the Karta or the member or any third party can be repaid to that particular person or can also remain in the same way forever. This way, one can enjoy substantial amount of tax-free incomes or incomes taxable at low rates of tax over a period of few years through effective and smart tax planning techniques through creation of several HUF within the larger family. For example, the father HUF, son HUF, grandson HUF, etc. Since HUF is a very deep and complex topic involving several intricacies with regard to legal aspects, succession planning, taxation, etc., feel free to contact us in the contact details to be shared in the subsequent slide at any point of time. Also, to be updated regularly with regard to the developments in the world of finance and taxation, subscribe to our YouTube channel.